What are your biggest takeaways from the book for those that haven't read it or aren't going to have time to read it? Are there like one or two takeaways that you'd pull out?
Yeah, it's that ultimately in most credit systems and most currency systems, it gets to a point, mostly just due to kind of incentives of policymakers or bankers or just investors in general to lever up, and the kind of the Keynesian response to that, which is to provide more stimulus. Ultimately, you reach an endpoint where the currency system, the monetary system, the monetary regime that you're in is no longer sustainable. And so, policymakers, incumbents will do everything they can to protect the system. But ultimately, it kind of, in this case, the debt cannibalizes upon itself. And a new system, whether that's a new reserve currency, but from a sovereign, or, say a monetary commodity, a hard asset, rises on the other side of it, and kind of a new global standard of value, unit of value is found. So, and that's not from my words, that's Ray Dalio, who looked at case study after case study. And so, yeah, I think we're living through historic times.
When you look at the bond market, obviously that has a huge impact as well as this all plays out. We've seen incredible volatility to the upside to start the year. Similar read on this as well?
Yeah. So, I mean, if you think about a fixed income product, right, you're sitting and you're getting a fixed payment in fiat currency. Okay. And so if your goal as a capital allocator is to maintain or grow your purchasing power, bonds that pay a coupon that's above inflation is a good deal. You get a payment, and not only you grow your purchasing power in nominal terms, but in real terms. But if we say have inflation at 8%, and I think these next readings with these commodity markets going parabolic, these next readings are going to accelerate in terms of CPI. And so you're sitting on a fixed income product. What do? Well, you dump it, you sell it. So we're seeing massive volatility in the most liquid markets in the world. Like, people think of equities as kind of the driver, but really behind the scenes, these fixed income markets, these credit markets, really kind of set everything else. And so we're seeing just massive volatility in credit markets. We're almost surpassing the kind of COVID crisis. And so there's trouble, and the plumbing is saying there's something wrong in these global markets, and I expect volatility to actually increase. Yeah, so I've covered this on the past couple of your shows, the previous months, and a lot of people reach out and be like, aren't you kind of interested in Bitcoin? Why the hell are you covering junk debt? Like, who cares? And the reality is, behind the scenes, there's pretty big implications if these things are selling off. So the principal value of bonds is inverse to the yield. So when these things are selling off, right, because inflation's running hot, you own fixed income, you sell it because it's not a good deal anymore. It's not a good bang for your buck. Well, what happens is the yields rise. And so what this means, and we cover this a little bit later, is not only is kind of liquidity draining out of these fixed income markets, but also the financing costs for these corporates is rising in tandem. So not only are these fixed income investors delevering, they're selling, they're getting these off their books, but also you see financing costs really rising across the board for corporates. And so we haven't even really seen that come into play yet. But this isn't just a kind of a corporate debt or investment, junk or investment grade debt corporate thing. This is just basically all fixed income products, because again, inflation is so rampant. And so eventually, and I think what hasn't been priced into markets yet, unfortunately, is that these inflation risks and these kind of the credit sell-off eventually leads to liquidity and solvency risk in fixed income markets, as no one can get cheap financing in a historically over-indebted economy. And so, there's these markets are spelling trouble.
I know you and I have a agreement on the idea of Bitcoin being a pretty good solution. You've got the Bitcoin price chart here going back to kind of beginning of 2020 when it was down in the $5, $6, $7, $8,000 range. What's your read on where Bitcoin is now and how it's reacting to all of this?
Yeah, so just on everything I'm seeing in credit markets, kind of commodities, equities, big picture, global macro, it looks increasingly likely, in my opinion, and I could be wrong here, that we're kind of headed for some sort of deleveraging or liquidity event. Okay, so what does that mean? And as a Bitcoin bull, how am I positioned? Well, I kind of, funny, I put an arrow at the bottom, kind of at that COVID crisis chart, and I said, Bitcoin is dead. It has failed as a store of value. And what I mean is I'm not calling for Bitcoin to go to 20,000 or 15,000 or to get cut in half overnight like it did in March of 2020. I don't know. And so, I am holding some cash and hoping to buy blood as a long-term Bitcoin investor. But I think more so is I believe when we're talking about the Fed being trapped is ultimately what we're referring to is if there is a deleveraging event, the Fed is going to be stuck with basically yield curve control as an option, meaning they're going to monetize any amount of debt they need to keep this game going, to keep this credit market functioning properly. And they'll probably come out and use all sorts of jargon to explain why they need to do it. But ultimately, this is kind of the end game of this system. You referred to Volcker right before I came on. I was watching. Well, in the 1980s, I think federal debt to GDP was about 25%. Right now, it's 120%.
When you start to think about Bitcoin's price, I think in the short term, we saw Bitcoin rise. At first, maybe it was up, or I think it went down. Actually, the night of the invasion, it went down, a couple of percent. Then it was up as high as 25% from the start of the invasion. Now we're probably sitting somewhere in the 10, 12, 15% range. Is that what you would expect in this situation? Do you think that it was a less severe move than you would have expected? Is tax selling coming into April 15th still, kind of part of this? Like, just talk to me about the price and what your expectations have been and kind of how you see this playing out moving forward.
Yeah, so 2022 has been kind of a landmark year in the sense that we had the Canadian trucker convoy with the government explicitly just freezing bank accounts, seizing money, seizing assets, and then followed up by kind of an order of magnitude or two larger than this. And yes, it was a sovereign nation that kind of committed some sort of war crime. Yeah, I understand that, but Russia had its foreign exchange reserves frozen. So that was kind of for a lot of macroeconomic economists and kind of followers of this incumbent petrodollar monetary system. They were saying, "Whoa, this is a huge line in the sand. Sovereign foreign exchange reserves, if they can just be frozen, are they really money?" And I think that kind of has made the case for not only Bitcoin, but I think gold is close to breaking all-time highs today for bearer assets in general, something that's not someone else's liability. And so at the same time, you have people that are kind of trading Bitcoin on day-to-day timeframes, they're trading correlations, they're trading it based on dollar strength, which increases during kind of financial condition tightness. But on the other hand, you have people that are saying, wait, I think the end game to this is going to be more money printing. And honestly, I don't think that there's many things that you can truly own in this environment. Whether you're a political dissident or whatever the case may be, maybe you just want freedom money. The reality is there's not many things that you can completely control. And really, there's nothing else that you can completely control that you can guarantee no one can arbitrarily create more of or dilute kind of the total supply.